Hello everyone, this is Ron Finberg from CM Trading. I want to welcome you to today's presentation, Weekly Trading Analysis. In today's video, we're going to take a look at last week's trading with an eye on this coming week's trading. So let's jump in straight to what happened last week. Last week, probably the big news that was going on was actually in the middle of the week when Ben Bernanke spoke. He testified to the Senate Banking Committee in the U.S. More or less, he said he continued to state what the Fed had earlier said in its previous FOMC meeting, that they have a cautious outlook, they're taking a look at the jobs market, but most importantly for traders, he took a wait and see attitude. He wasn't going to put in, he wasn't saying anything about taking any new stimulus, and this is very important for the dollar because even though the dollar had initially kind of weakened after Ben Bernanke's negative outlook, what happened though is it set the stage that going ahead, the traders are kind of coming to the grips that maybe there's not going to be a more quantitative easing going on in the U.S. and there's going to be a lack of monetary stimulus. Therefore, what we're seeing now is we're seeing the dollar respond very positively to any negative news. Where did we see that negative news occur? That negative news then occurred later in the week when we had the Spanish financial crisis was kind of moving back into the headlines again, as not just a bank was asking for money, but we had an entire region that was kind of collapsing and needed money. As a result, we saw the euro collapsing towards the end of the week. Spanish stock markets were down about 5% on Friday, and that has led us to the beginning of this week where we have that risk aversion dollar, that's led to a dollar rally to begin the week. Okay, so with that little backdrop of dollar, the dollar strengthened to end last week while the euro's tanking, let's take a look at what we got this week. So today we have more, Greek is back, Greece couldn't take Spain being in the headlines for too long, so it's back into the headlines again, and there was some talk about Greece perhaps exiting the euro and the eurozone. More fallout from last week's news from Spain. We have Spanish 10 years at 7.5%. That is, that was way above where they had been, in the 6.5% level when they had made some after the EU summit a couple weeks ago. But the big thing for this week is what we see over here. The big thing that everybody's going to be watching are the U.S. earnings reports. Why is that important? Because as the U.S. has kind of come back into focus over here with Ben Bernanke giving a negative outlook for the U.S., however, not necessarily saying it's strong enough to warrant doing further monetary stimulus. Therefore, people are watching again what's going on in the U.S. If these numbers are good, then we can have, if these numbers are really good, we can maybe see interest going back into stocks, which is from retail investors, which really hasn't been around, which really hasn't been happening in the last couple years. So Tuesday we got the Apple computer numbers. If these Apple computer numbers are really a market mover, not just in stocks, but really across the entire market. So they could trigger an entire risk rally on their own. So if we see these Apple numbers coming out really strong, then we could really see a lot of these riskier currencies also doing well as a result. Additionally, it's probably not a market maker, but it's worth watching. A lot of people are watching because Facebook's coming out with its first quarterly report, so that will be watched. People will have their eyes on it. The one to really watch is the one where I'm watching is on Wednesday. We got the numbers coming out from Boeing. Why? Boeing's a big manufacturer. Also, last week they had, last week or 2 weeks ago, they had a lot of people were talking about how their sales were doing very well, and they were going to, kind of taking over Airbus as far as accelerating their gains on Airbus. Therefore, with a lot of good news coming into this week's earnings report from Boeing, if they don't have if their outlook is not very strong, then that could be a big market mover, and we could see a lot of manufacturing stocks in general sell off as a result if Boeing does not do well.
Specifically, one area that could also fall apart if Boeing's numbers are not well is crude oil. Crude oil has jumped, has rallied. We're going to see a chart momentarily. Has rallied from about $77 up to about 93 from the beginning, from about a month. However, now it's about in the high 80s, 88, 89. Therefore, if this week leads to like a lot of bad U.S. outlooks from these earnings reports, it could very easily create this negative sentiment could very easily take down oil again. So one thing I'm watching over here. Also, last but not least, we have Friday's U.S. advanced GDP numbers. These could really go either way. If they're bad, it could it can make the dollar go lower. If they're good, they can make the dollar go lower, depending on what happens in the rest of the market. So it's worth watching, but there's a lot of scenarios that could play out based on those numbers. Okay, looking ahead, let's look at a couple charts over here. All right, let's take a look at the euro dollar. A lot of people are talking about how the euro dollar is closing in on the 2010 low, but before we take a look at before we look more on the euro dollar, I just want to bring up some other charts. A lot of people talking about this euro dollar. However, before taking a look at the euro dollar, you got to look at these other charts. Specifically, let's look at the euro Aussie. This thing was around at 4 years ago. This was about 2.08, and now it's at 117. So this thing is completely collapsed. The Aussie is basically strengthened about 80% against the euro. 1 euro was worth 2 Aussie dollars, and now it's worth less than 1.2 Australian dollars. So that is a huge move lower. That's a lot of weakness of the euro against the Australian dollar. Furthermore, the euro pound. This thing's also in like 4 or 5 year lows over here. It continues to fall lower. This was in the 90s. And, now it's in like the 77s. Continues to fall over here. The fall has been less. Has been more gradual than against the Australian dollar, but still shows this multi-year rotation out of the euro. So people talk about, okay, the euro's down. But really this exit from the euro has really been going on for quite a long time. If you take a look at the euro against other currencies, so maybe the euro dollar itself, we don't see this massive rotation out of the euro towards the dollar because it's still above its 2007 lows. But if you take a look at it against other crosses, then you'll see that the euro is really, there's been this exit from the euro has been going on for quite a while, and it never really recovered after 2010 against other currencies. So we have the euro pound, we have the euro Aussie before that, then the euro yen. Also, this is below 95. Also, multi-year lows against for the euro yen. It's like 10-year lows. I'm not exactly sure exactly. Huge lows of the euro yen, and more just shows this complete rotation out of the euro. Why is this important for us? Back to the euro dollar. What this shows us is that with this massive rotation going out of the euro, if you're out there saying, oh, I'm going to buy the euro dollar because it's sold off so much, you have to keep in mind the historical context that really, as much as the euro dollar has sold off, it's really it's been weak for quite a long time. So just to say that it's sold off, it's down a lot, it might bounce, it might not be a valid reason for it to go higher. In fact, it's probably a bad reason just to say something sold off that'll bounce, because as we see, just because something's gone lower doesn't mean it will not continue to go lower. So remember, if you're buying the euro dollar, remember that you are taking a very speculative move. You're buying the euro against when pretty much the entire world is rotating the money out of it into other currencies. Elsewhere, one chart that looks interesting is the pound dollar. Even with all the euro weakness lately, we see the pound dollar has kind of stayed within this trading range of about 154.50 to 157.50. What this is setting up is if we don't trade below those lows again, we do not trade below this the 154 level, 54.50 level. This could set up a breakout higher if we trade above 157.50. Keeping my eyes on this one over here. Possible move to 159 if we can get above that current intraday, that current longer term resistance over there. Next chart, the Australian dollar. We've had this, if you take a look at this chart, basically over the nearly 2 months we've had the Australian dollar has gone from like about 95, it's about 9.96 all the way up to 1.04, a nice 9% move higher of the Australian dollar versus the US dollar. So this one was, we mentioned before, this is a big week for US earnings. So specifically, the Australian dollar could be one of the big movers based on the earnings. If we see that the Apple numbers are really strong and the Boeing numbers are really strong, and we have a risk rally, then the Australian dollar could be, since it's been in an uptrend, it could be one of the big beneficiaries and continue to move higher if we have a risk rally in the market. So risk rally in stocks, the place to be would probably be the Australian dollar if you have to go somewhere. Elsewhere, crude oil. Okay, we mentioned this about the Boeing earnings, how crude oil has moved up. If we take a look at the longer-term chart here for 2012, we'll see that the crude oil is trading around 110, and then fell all the way down to about 76.50, a huge, about a $14 move. So even though we have this current jump in prices of crude oil though could be poised to continue falling if we have this negative reaction again, if we have some negative outlooks in U.S. stocks. Okay, so once again, just to summarize what we spoke about today, the main items are coming up this week are the U.S. reports, U.S. earnings reports, which are expected to be the big market movers. Also, we have Spain. Spain and the EU are back into are definitely in focus, and we see the yields of Spanish. We have the Spanish yields and the Italian yields flying higher, which shows that there's more talk about bailout and more talking about the eurozone falling apart. However, as we mentioned earlier, it just continues. Whatever happens there, it really just continues this longer-term multi-year rotation out of the euro. So it shows even if we have good news in the euro, it's probably just opportunities to short it and not necessarily opportunities to be buying it for the long term. Next we have the pound dollar looks like a breakout candidate if it can get above 157.50. This will probably not happen this week, but it's worth keeping your eyes on. Last but not least, we have this Australian dollar. I really like this trade over here. If we have the risk rally coming back in the market, the Australian dollar looks like it could be the winner in the market. Okay, thanks for viewing today's presentation. If you have questions and comments about today's video, you can send them in to dealing@cmtrading.com. Or if you want to reach me directly, you can hit me up at Twitter @RonFinberg. Answer you quickly. Any questions you can send over there. Thanks for viewing today's presentation, and good luck with all your trading. Bye-bye.